fantastic. Thanks, Simon. Thanks, everyone. I hope you're enjoying all the sessions. Some really good information coming in. So purpose of who we are and things like that, very difficult as a pro trader. It's sometimes very difficult to understand as a new trader how to read the markets and things like that. And I'd really like to show you some of the tips and some of the tricks that I use when I'm teaching traders. And maybe they could be new traders, intermediate, or even advanced. So without further ado, I'll crack on. Any questions, obviously, direct to the chat as you've been doing. Happy to try and answer them as we go as well. I'm sure Simon will be prompting me as and when. So when we're looking at the markets, we must always prepare ourselves, okay? Because entering any trade, and for new trade, you can't just get into this without aligning yourself with proper industry experienced professionals, and hence the reason I set up ITA Intelligent Trading Academy was to hopefully promote the good process of trading, not the false lifestyle generators. Too much of that on social media for me to like too much. So financial markets are extremely volatile, and we need to be strict with our risk and our trade management. ITA was created to show the process, as we said. During this session, we aim to show you what we do as professional traders and how we give out our educational or mentorship to the traders that need it. We tend to work with about 100 traders at any one time on our funded account programs. So I hope you enjoyed the session. Any feedback, please email at info@intelligenttradingacademy.com or just chat onto the webinar chat that we've got here today. So who's ITA? What are we all about? So we have about 40 years combined experience, all been professional in institutional trading. We're all Society of Technical Analysts registered. I've got my stock exchange exams in the over here in the UK. I've been FCA regulated for many years, albeit the educational part of the business doesn't have to be. We've been government backed over here. We very much take an institutional approach using simple and structured trading strategies. Apologise if I do go on a bit quickly because we've got 45 minutes. I'll try and cover as much as I can to give you as much value as you can during this session. We've taught many individuals how to trade, some successfully. It's not for everybody. Not everybody makes it because they fall back on their discipline. They let apathy set in. They don't prepare themselves or focus themselves, as training requires. There's no fast fix for a fast buck. We are a community of professional traders, and we're trying to support like-minded individuals like yourselves that are here today. Our programs focus on the key areas which everybody should focus on: the psychology, risk management, and your trading strategies. And also you have access to our global community of traders. We've got an office in Germany as well, soon to open up in Spain Q3 this year. So something to look forward to. So who am I? This is me. MSTA means a member of the Society of Technical Analysis, and CFTE is a certified financial technician. Whilst being fundamentally trained, I do like the technical part to get me into a trade, and then we kind of fuse that both together. Worked at Societe Generale for 15 years, 16 years, Credit Suisse for 6, trading equities and FX. So yes, we've managed big accounts. It's not about the account size, it's about our risk management, the percentage of that we're making. For me, my mindset is a bit different to an average retail trader, so I can really help portray my kind of thinking for you guys. Worked in some various centres, good for disciplined and consistent approach. Very experienced in risk management, educating traders, and our psyche, how we get on when we enter a trade, because everybody has a different tolerance to risk, and everybody has a different way of retaining information and getting through that trade. And trades will happen in all different shapes and sizes, so we've got to be prepared to that, and we've got to be flexible. Always be flexible in your mindset, as well as looking for those structured setups. So why do people trade? I'm sure many of us during this COVID lockdown period, we've seen ourselves, we have more time, we can create a secondary income working from home. I think people are going to be definitely more looking to something like what we offer, just as moving forward to keep themselves out of risk before any vaccine is kind of found. It's good to be your own boss, nice to be in charge of your own destiny. Always good to learn new skills at any time. Good to have, we want financial independence. At the end of the day, that's what trading can offer if you do it right. Good to understand the financial markets. Nice to manage some of your own money. I've got some property, got pensions doing their own thing managed by someone else. Yes, this is my harder, faster, riskier money, but I'm managing it in a low risk way by only risking 1% of my underlying capital on a particular trade. I'm not keen, I don't tend to use leverage or anything like that. Maybe a little bit as you move forward to get more into the pro status. Good to have a sense of achievement. Always pat yourself on the back when you do well. And ideally, at the end of the day, as I said, we're looking to increase our wealth. So we need to learn a process of understanding technical analysis and strategies. We could read the charts. We're trying to spot profitable trading and investment opportunities to make money. People call that capturing alpha. So don't worry too much about the terminology. You can find that as you go through your journey, and the more and more you trade, the more familiar you get with the terminology that's out there. We use some ready-made algorithms. They're semi-automated, so we place some rules into the system. Once they hit, then we start overlaying some manual analysis and some bits to follow simple and structured trading strategies. By adopting a methodical approach, hopefully you're creating a discipline for some consistency in your returns. Very conservative on the risk management, and obviously we need to understand how to manage our mindset, especially if it's something new, because obviously I couldn't go into any job and just sit down and do something without being trained, understanding exactly what's going on, having a mentor, understanding my psyche behind how I get the most, how I am the most productive in the job that I am. So always be flexible and be adaptable to adopting new methods. So simply here to learn a process during this COVID-19 period, okay, which was this area here. Just want to highlight this. All I've done here is stuck in a 200-day exponential moving average. Okay. All I want to show you here is one of the principles of technical analysis, typically the third rule, is historic repetitive patterns tend to repeat themselves. And all we're seeing here, if we created a pullback towards this 200-day EMA, a new high is created. At every juncture, a new high, eventually a new high. This is where we're at today. Probability dictates we should go higher, so we should all pile into NASDAQ. Even though it seems crazy to do so at these levels, you're going with the probability. And as for me as a trader, I'm not going against that. If this happens and we create a lower high and we start coming back and we close below the 200-day moving average, I'm then going to decide, okay, maybe the market is starting to fall over. Maybe we have seen the top, but we can't pick tops or bottoms. Okay, what we can look at is conservative, constructed, credible technical analysis. And this is a very simple chart. We'll go into more depth of some momentum strategies a bit. But if you're looking for those commonalities, look for the theme. Even in times of disaster, this level here held. So why not? You bought it here, and why not here? Why not here? Okay, so let's give yourself 2 weeks, 3 weeks. Let's see if the NASDAQ is at 10,400, not 9,985, wherever we are now. It could come back down here to test. It could create something. It could get a little higher there and then go. But we are all we're saying here is look for the commonality, look for the theme, play the probability, because the probability will be higher in your favor. If it's done it before, it's highly likely to do it again. So how a trader thinks is they look at indicators and entries, and we all must put a stop loss in at the time of trading to minimize our risk. We look at exits and trade management. Really, we should be continually learning, managing our trades more effectively and risk managing our trades more effectively. So again, I only risk 1% of my underlying capital in any particular trade, especially when we're teaching the group, basically to keep you in the game longer and so you can learn the process and have a good experience in trading. But when we talk about education, and again, go back to what I said earlier about, if I went into any of your jobs, I have to teach myself, I have to learn. Yeah, people that don't take the education just go in. It's more like gambling. They don't understand why this is happening. They forget the news is coming out. Oh, I didn't realize this indicator met that. What does this mean? What's the difference between a simple moving average and an exponential moving average? Well, an exponential moving average takes key more to the latest weight in the data. So you'll find the EMAs cross more. So you just want to understand some simple things in the marketplace. So we can learn new skills at any time. And when learning a new skill, education is key, and coaching or mentoring and education is key for safety and hopefully for increased performance, and learning to trade is really no different. Even the best teams in the world, they have a coaching staff behind them. Liverpool don't just put out the 11 best players with nothing else behind it. They've got dietitians, they've got physios, they've got management, they've got people looking at their psychology. They're always trying to discover new techniques to give them that advantage, that edge, and hopefully in our trading community we can give you that edge to help you. So here's an example of why you need to understand something and the mechanics of the market. Everyone talks about leverage, how great it is, but for me, have a look at this example. If you deposit 2,500 into a broker and say, for example, you get 20 times leverage, that's 50k. Lots of people will give you, in the UK it's 30 times, even offshore it's even more than that. So by risking 1% of 50k, that's £500, and I can still lose 5 trades on the go. And that's, to me, there's a few things wrong here. Okay, so one of them is £500 a trade for an experienced trader is far too much to risk. Okay, you can easily lose 5 trades, and really think about it. You're risking 20% of your initial deposit per trade, because 5 times 500 is 2,500. If you lose your initial deposit, you get a nice email either saying your account's been automatically shut down, or you get a margin call. You've got to put in more money. So hence the reason, put in 2,500 and trade with us, and then you would only be risking 1%, which would be £25 a trade. So you've got to. The idea is to keep you in the game as long as possible to earn, so you can learn and have a reward out of trading. Then, of course, if you're more experienced, you can apply some leverage, but use your common sense and choose your tuition and education wisely. So when we look at technical analysis and things like that, fundamental analysis, as we know, examines earnings, dividends, new products, drills into the company's balance sheet, what the growth forecast is for next year, +2, +3, etc. Okay, so technical analysis will use market indicators. We'll look at price action. Many are mathematical transformations of price, often including volume, for example, advanced decline data and other inputs. And these indicators are used to help assess whether an asset is trending and the probability of its direction and of that continuation of the question. So 3 main principles of technical analysis that we look at are: market action discounts everything. So that's something in the candlestick, which I'll show you in a second. Prices move in trends. I'm sure some of the other commentators, you've seen lots of uptrends and downtrends, but prices can move sideways as well. So they can be range bound. And there's, if you're using moving averages to be spot, normally on range bound, they're difficult because a moving average is a laggard indicator, i.e. taking data from the past. They tend to be in the middle. You get a buy or sell signal in the middle of the range, so not the greatest for me. And history tends to repeat itself, like we showed you in the NASDAQ example on the 4-hour time frame chart. And I'll show you. I'll just quickly go to our platform here. So on the 4-hour time frame, we were looking at NASDAQ here. Okay, and the reason I do that on the 4-hour time frame, because if I look at it on the daily, it's such an aggressive, it's a big move up. Okay, if I use the 4-hour time frame, it's like putting my glasses on. I can drill down into the analysis a little bit further. The pro trader is going to want to see, well, I need to see inflection points. I want to see confluence. I want to see where my support is at this particular time, at this particular stage of our market or asset that we're looking at. So, and you can look at other assets as well using this technique, as well as some of the others that we can show you in due course. So going back to the presentation here, remember, 3 main principles of technical analysis is market action discounts everything. It's everything you see in your candles, prices moving trends, and history tends to repeat itself. And we've shown you some examples of that. You'll hear lots of people talk about algorithmic trading. So all this algo stuff here is, it's in our cars, in our washing machines, and we can use it at ITA to program certain crossing in EMAs, which most people would do on the retail side. And I think it's really important that we give you some basic algorithmic strategies so you understand why you're entering a trade. Really interesting that a lot of people just, we don't do hope analysis. We don't, I hope it does this, I hope it does that. We have to do conservative, considered, structured technical analysis to give us the best opportunity of learning this craft, because it is something you can take with you for a long time and use hopefully profitably for as long as possible. So with the development of software, many retail traders now have access to and use these strategies, obviously under our educational guidance here at ITA. So looking at a candlestick, sorry if it's a bit basic for some people, but appreciate there could be some good, some new traders here. We look at really a bullish candlestick, so it closes higher than where it opened. So you get a nice green box there, very bullish. And the high and the low are the tail, known as tails or wicks. On the decreasing candle, the high and low are still the same, but obviously the asset closes lower than where it opened. So a nice bearish red candle there. And within candlesticks, we have a nice cheat sheet. There's all different patterns you can look at, something called doji, bearish engulfing patterns, lots of different things that we can teach you how to spot particular tops or levels that are kind of interesting to us. So by selecting just a simple set of rules, we can look for the higher probability trades. You can see you've got some EMA crossing here. These little dots are called parabolics. We're looking for a shift in momentum at the time our manual trend line breaks. So here's our opportunity here to buy and sell. Here's our opportunity to sell. Here's an opportunity to buy. Here's an opportunity to sell. So as I said, at the time of this 200-day moving average, that looks like a resistance point to me, which actually it did do at that time. But what we need to do is just identify those rules and then apply them. And notice what we said earlier was these opportunities will come in different shapes and sizes, but you've got to make your chart so you can see it. You've got to make it look easy, and this is where you do your back testing. When you look at back testing, you see, well, where did I get in, where did I not get in, and you do your analysis on that basis. So for us, it's all in our the higher probability trades, and remember, in trading, we have to be patient. So what really helps with our mindset is a strategy, okay? Because you've got, we can teach easy, the new and intermediate and advanced trader. They are tried and tested. They're simple and structured. By being systematic, you can adopt a methodical approach, giving you a bit of more discipline for consistency. Obviously, we can teach you those risk management tools. And really, one of the biggest things should remove some of the ambiguity and emotional ties, especially for your mindset. That's really important. And we're going to cover I want to go over a little bit of psychology and mindset just as we go on now. So as we know, a person mindset psychology is a way of a person's way of thinking, their opinions and beliefs, and we all have different ones of those. Trading is unlike anything many of you would have done before, so it's important to get our mindset management and our method correct at the start. Okay, there's no point falling into bad habits. We'll all have different ways of trading, different tolerance to risk. As I said, your trading styles will be different, different behaviors when you're in a trade. Okay, and your trading style will be determined by and how long you commit to this, your current work time, your lifestyle. But we think 30 minutes to half hour a day will get you somewhere and to a good stage of understanding the trading and the analysis and the marketplace. But it takes time. As I said, there's no fast fix. You just take the time and let the process gently come to you, because everybody has a different way of retaining information, reading the charts and stuff like that. Let's show some continuity by the analysis that we give out. So keep focused on your trading plan, not on your emotions. That's really important. So we think our mind is taken up, we think 10% of our strategy, 30% of money management, but look how important the psychology and mindset is. Really important, because we all run around with a head on fire when a trade's losing. I'm an experienced trader, I still don't like to lose trades, but we still have them. That's part of the business, that's part of the process, and that's part of understanding the type of trader you are and learning more about yourself and your mindset. So by creating a discipline, you'll see some consistency in your analysis, which will hopefully breed a bit of confidence. Patience pays, in my view. So the more patient you are, the more profits you'll get with and be successful. Hopefully, that will see you through, what you need to get to. So just by following that little graphic, by just in the first instance creating a discipline. Okay. So we would normally find, why a trader is really losing. They don't have any risk. They have improper risk, money management in place. They revenge trade. They've had a bad 2 or 3. Oh, I'm going to do this one. All the rules. They chase the market, then they break all their rules and don't follow their plan or their strategies or the algos that they're supposed to be working with. They have no structure or process in place. They let losses run, cut winners quickly, where you should be actually cutting your losses and running your winners. If you're in a winning trade, why give it to the market? Why give that money to the market? You take as much as you can when you can. You might make a lot of money over an hour, but it might take you 15, 16, 17 days. It might take you 3 months, depends what type of trader you are. Just be prepared to accept that the market dynamic will move in all different ways and your profit will come in all different shapes and sizes, like the trade ideas will come. So we can't control certain things, and we can control certain things in the market. What we can't control is the price movement and the outcome of a trade. Okay, they're two variables that we have nothing to do, because the price movement and everything is taken in consideration, volume, orders, everything that's in the marketplace at that time. We can control when we trade, when not to trade. We can control what assets we trade. We can control when we exit a trade. We can control our risk. So because we're only risking a little bit, our psychology and mindset is hopefully a bit more secure. We know our worst case scenario, so that helps our mindset, obviously, because we're only risking 1% of trade. We choose our tools. You choose your development and continuous learning. Okay, really important. Those things we can control, we need to focus on. So educational programs, pretty much this is, I'm not going to go too much about this, but we offer lots of webinars during this obviously COVID pandemic period. We do lots of things remotely online. We got an office in London, as I said, in Munich. We do in-house sessions. We go back in July. You get a trader email every day, 9:30, 10 o'clock in the morning. You get access to our VIP Skype group. We have 3, 6, and lifetime programs. But we feel you've got a real income opportunity through our education and mentorship, and to that effect, we back our traders with funded accounts. If you don't, look at the following examples here. Online platforms. Some tell you 79% of people lose their money or whatever. Be part of the 21 that don't. Okay, different platforms have different things, but they have to tell you, that's a high percentage of losing traders. Yeah, you don't need to do that. What you need to do is get yourself, look for an independent educator or mentorship to get you on the right track. So for the recipe of success, put in your analysis. You got to read the news, look for support from other traders. You get that through our VIP group. All the indicators, FX chat, ITA courses. Look for the things that are going to help you. Yeah, and say if I want to bake some bread, I don't just put some flour in the oven and expect it to rise. I've got to put all the other ingredients in it to make it the best successful that I can. Okay, so you need to do that as well. Don't think everything's going to come to you and look for everything that's free, because that's never going to happen all of the time. Yeah, you've got to put some resource and invest in yourselves. If you do that, we'll invest in you with our funded account. Many of our traders, because they're active traders, are making between 5 and 20% per calendar month. Those examples are achievable. Let's show you how we can do some of that. Here's some examples, some P&Ls. Obviously, you want to see more winners than losers. That would be nice. There's some closing trades, some nice pads there, managing our risk quite nicely, banking more than 1%. Again, managing our risk quite nicely, but that's the kind of thing you want to have on your close trades, and you'll see that with us, because we've got plenty of years of experience, qualified techie analysts. There's no charting through software or anything like that. We don't own any of that stuff. Obviously, what we're looking at as well, let me just move that. We use, we think we have the best value education there is in the market. We back our education with funded accounts, good trader experience, and the broker, someone like Scandix will have competitive spreads and swaps. So we place the most importance on return of your investment and the quality of our analysis. And again, the community of like-minded traders that work together and encourage one another. There's plenty of places you can pay 3, 5, 10 grand for courses. It's not for me. We will offer a lifetime support offer for those who decide to join us on that particular program. So really, by making it nice and simple, you can see just by following some arrows, if you want to be a lazy trader, you're going to be in a better space with working with ourselves. So we're going to look at some analysis and strategies, and I'll go back and do a bit of live, some live examples shortly. But when we look at, we have three that we kind of look at here. Manual analysis is very important to me. That's how I was brought up. You know, I was very much fundamentally trained. I adopted technical analysis to give me an edge at the time, especially looking for support and resistance when I was trading equities, and it works, you know, well on most asset classes. We'll concentrate a little bit on the fast track momentum today. And first directional cross is a different way of trading, but a combination of moving averages, we can identify good trade setups on pullbacks and reversals. Here on fast track momentum, as it kind of says on the tin, we're looking to trade with momentum. I like to buy things as they're going up and sell things as they're going down, basically. Okay, so I can't give all the rules away, but I will give some and show you exactly what we do. So we can take advantage of price action by looking at these rules. Semi-automated algorithm enhanced with manual analysis techniques, which will educate you as you progress with us. It's multi-asset class functionality, and really the lowest time frame we go down to is H1. So typically I'm a 4-hour time frame enterer, and I look on the daily, weekly, monthly, just to look at the bigger picture as well. So by looking at CAD yen, a blank chart here, it can be daunting to some new traders. If we overlay some analysis and things like that, we know we're in a downtrend. I want to sell with the trend. My secondary trend line breaks at the time the 200 moving average holds as resistance in conjunction with our downtrend line. That's our opportunity. Again, opportunity, that's our opportunity. Here's our opportunity, all different shapes and sizes, but guess what? Profitable ones, because momentum is falling over at the same time these actions are all happening. So be proactive with your trading, and then you can find out, you'll find you will be more should be more profitable by actually actioning those trades as they actually happen. And people ask me, oh, when's the best time to trade today? When's the best time of the day to trade? In my opinion, well, setup could happen at any time of the day. So when that setup aligns with your rules, that's the best time to trade. It's not at 2 o'clock in the afternoon, it's not 5 o'clock at night. To me, it's when your setup, when your rules and your trading plan has been met, that would be the best time to trade. Taking that forward, we can look at the Dow Jones, recent example here. A good sell opportunity, buy opportunity, sell opportunity, just based on the rules of that strategy. When that all happens at the same time, 3 higher probability trades we can take advantage of. So, and by following strategy guidelines and educational help, this has worked really handsomely in this index recently. When we look at manual trends, I'm just going to go to the let's go here at the moment. So this is where we were this morning on some of the things that we've been looking at. We've been looking at the dollar index. Okay, we can see some inflection points here. It's below the 200-day moving average. Yes, that is the 4-hour time frame. If I look at the daily, it's still below. Okay, maybe there's a little move up, but again on the 4-hour, we can just see this candle is holding today, or this 4-hour candle has retrenched and come back from there, highlighting to me maybe this area of resistance as drawn and shown and highlighted could be staying. Okay, so we need to monitor that quite quickly. If you think of that, that should have an effect here as well on dollar CAD. We need to just close that up a bit. Okay, again, some support here, resistance area faffing about a bit around the 200-day moving average. Yeah, closed above, closed below, closed. So is that a kind of corrective phase? Not really, because we haven't had a big impulse, a big spurt into it. Looks like it could be lazily rolling over, but we'll have to wait and see. Gold has been a fantastic player for most traders recently on the long side and bullying up, for its highest prices recently. And you can see the trend line is intact. So our uptrend here, we're still intact. We'll wait and see if it pops down to here, then look to buy on the reversal. If I see the candle, this is a body here, that kind of color is the body of the candle, as a part of that illustration earlier. We'll come back down. We'll look, if it closes below here, we'll see where our indicators are and maybe take a short trade, because trends do break They don't last forever, as we know. Crude has been a particular favourite of our group. We've analysed it on with our group on the daily, just looking at this 200-day moving average. And you can see here, if some of you are thinking of understand what gaps, have looked at gaps and things like that. A gap was created back in February. The gaps are there for filling, in my argument, or in my school of thought. Big downward move, but again, here to me is now resistance. The gap entry and the 200-day moving average is solid resistance, even though the oscillators and confirmation indicators are just messing around a bit. We could see this hold and hope maybe come back down. There is a little break of a trend there you could possibly think of. Yeah, we're just seeing some conciliatory phase kicking in. So we'll see what happens, and we'll just be monitoring that for some time just to see if that holds, if that gets engulfed, and if we come down even further. But crude, very based on supply and demand and things like that. So this is what your screen will look like. You can see below the 200-day, we get that move all the way down. Okay, it stays there. This will be the first touch it's had for some time. So we would expect that to hold. Okay, so as a trader, as a pro trader, I'm preparing myself all of the time. If we look at manual analysis, and this is really where you want to be after about 6-8 months, maybe not. So let's have a quick look. Let me just have a quick look at some of the questions that you've asked while we're here. Lots of probably resources for new traders on there. Happy to do a free session with someone, which is one of the things you're asking here. Okay, I can provide funded details. Of course I can. I will do it. I'll offer you a half-hour free session with me if you want to drop your email into info@intelligenttradingacademy.com. Not a problem. There's a bit more about that. It's one of the offers we can have today. Yes, I do trade against the trend. One of the things I look at is something that's abnormal to what's happened. So if a price action is far away from its 200-day moving average, it's kind of picking the bottom as much as I can. I would look for some kind of anomaly. Okay, they are higher probability trades, but sometimes you have to use a bit of discretion of when to get in and when to get out. So one of the things I do look for overbought and overs is the distance it's been over a period of time from its 200-day EMA. That's just something I do specialist on my own, but happy to show you those kind of things. Cable sterling, how does this look going forward? We're in a big bearish trend at the moment. We know that's the case. We've got Brexit feeling. Let's have a look at cable while we're here. Okay, that's on the daily. So this is again putting my glasses on. So I know I'm in a downtrend. Okay, how far low does it go? 119 rings a bell. You could have said, oh, has that broken? No, it hasn't, because this kind of here, a lower high has been established. Okay, so here we go. If you look on the daily, we've just started this downward move. Do we get down to the lows here, 114? I think first touch, we have to look at this level here, about 120 and a half would be my first guesstimate if this kind of downtrend continues. Okay, so you'll see things flick up and down like you do. Nothing moves up and down in a straight line, but I would say over a period of time, especially on the weekly, what does it look like? You've got every opportunity, I think, to come down to that initially 120, then 114 level. I'm not going to go against the trend. I'll only look to buy if it goes back up and breaks above, because we respect the trend. The trend now is interacting with the 200-day moving average. We expect it to stay below there for a while. You might get a rally the next couple of days if momentum just ticks up, but the longer term picture for sterling is down to the 120 and a half level, then the lows recently of March 2020, which is around the 114 level. So that's where I would look at as we stand today. So looking at the manual analysis, trend following techniques, Michael Cavell had a big book. He's a well-known author for successful, lots of trend following presentations that he does. So we'll utilize all this plus others in order to give us some really good returns. And really, all traders, investors have different risk appetites. So when you're looking at trend, you look at, I don't want to go into too much of these too much, price action, candlestick, our chart patterns, our time frame analysis, our nature of the market, our market structure, what does it look like. We're going to use these tools because they're really effective during trading. We have an ITA pattern blueprint which we focus on for that. So risk management, 1% per trade, and we're looking to get to break even methodology. We like the way things get in and out of or they move in and out to certain areas, and we look for that impulsive fast move, a corrective nature, then an impulsive move out, looking at the best ones. And when you read technical analysis, you'll be looking at flagpoles and pennants for those kind of things. There's all kind of different channels that you can look at, and we can show you those as you go. But we were looking for really the high probability setups. And really, this is a while ago in dollar CAD, you kind of go down to the 1 hour. We short then scale in on that kind of impulsive corrective nature, and you're kind of risking your money there. Risk reward was 10 to 1 here, 11 to 1, total realized gain was 21%. They're the ones you need to be patient with, and that's only a matter of about a week's worth of price data. It goes really well if you can get, and it takes a lot to get here, but say if you do it properly, those bigger trades can be there if you're patient and you learn your craft. And it's in our wins, not in your losses. So we have 2 free opportunities for you today to help us and see us. You can join our free Pro Trader Skype chat for a limited period, or you can book in a free 30-minute remote session with us, and that is at ITA info@intelligenttradingacademy.com. Okay, one of the audience has asked. There's some mild reversal happening now in some of the sterling trades. I mean, that's fine. I'm not a short-term scalper. I have a longer term perspective on where I think things are going. I'm not scalping for 20 or 30 pips. To me, that doesn't offer a mindset and a psychology of a trader. It doesn't work very well, because you can get blown those trades can work very hot and cold. That's just in my experience. Let's find something that works with a mindset that you can be conservative and constructed, and hopefully the discipline will give you that ability to be a consistent independent trader. Okay, so 2 free opportunities. Just email in info@Intelligent Trading Academy. You was at the webinar. We'll come back to you and book you in with a suitable date and time for everything, and give you the necessary links. So you need to learn the process. Successful traders, they always work hard. They never give up. They take ownership of trades. No matter what education you take, no matter what you're learning, okay, you must take ownership of your trade. Never look for scapegoats. Okay, they're your trades. Take ownership. Yeah, have the gall to say, yeah, I've done that. My analysis, yeah, appreciated that, this, that, and the other. Take ownership of your trades, okay, because that will help your mindset. Have clear vision. Have your goals. Understand your marketplace, your environment, your terrain. You can achieve lots of things if you work hard. You continue to learn, and you will progress. Okay, all the work is behind the scenes. So even though I'm doing webinars and lots of the speakers do webinars, we're continually analysing the markets. Okay, and strive to improve and raise your game. We can always be better. Okay, so never think you've got it. Never let apathy set in. There's always a time when you can work smarter, more efficient, and be hopefully more profitable. But you have to commit some time and some resource to be able to get there. During your education with ITA, hopefully you'll get to understand and learn how to read and look at the overall picture. You need to identify areas of support and resistance by looking at the bigger picture. And also, we need to create a toolbox, and because there's lots of contradicting information online out there, which can be confusing. Looking at confirmation indicators and oscillators, they're exactly what they say. They help confirm that trade idea and that strategy, and you do not use them in isolation. Okay, the chart is our template, and we add layers like these confirmation indicators for added strength and to help with the probability and the color for our trade setup. Here, for example, we like parabolic stop and reverses. They're a good one for momentum flips. You can see when they get engulfed. What I mean by engulf is when that kind of candle engulfs there and it switches to a bearish. It gets engulfed here, switches to bullish. Okay, so we like that for gaining some strength and gaining some kind of momentum flip. Relative figure is based on we use a 10-day average based on the closing highs and lows, and it really gives us the energy or the force where that particular asset is at a period of time. A bit more kind of wavy than others and can be a bit more flaky. I just like it to be in the right direction when we do the trade. Lots of people use a stochastic. I prefer the MACD because I like to see, when I get into a trade, I like to see a new cross here in our momentum shifting in a momentum, looking at where our kind of price chart and price action is going. If that's flipping in the same direction, well, then that's fine. Obviously works nicely on a break of a downtrend, break of an uptrend here. That would be nice to see. Not good for identifying overbought and oversold, but good for changing in momentum. For overbought and oversold, we use something called the RSI, the Relative Strength Index. So above 70 is overbought, below 30 is oversold. I tend to use this more on equities than FX, just a personal preference. So when we're trading, we need to prioritize our best chart setups. Look to see if we're trading with the trend. A weekly chart can clearly identify if the long-term trend is still in place. We need to look at support and resistance levels. What are the longer-term EMAs telling us? Is there any points of support and resistance that could hinder any progress? Where's the RSI? Is it overbought, oversold? Is momentum changing? We can sort of say we check the MACD for this. Where's the relative vigor? And also, very importantly, is there any economic news that's due out? So any immediate news events, i.e. things like that, referendum, central bank governor speaking, interest rates, announcements coming out, non-farm payrolls, which is a highly volatile period in the US markets. So it's important to commit to your trading plan and professional trader support for your continued development. When we look at moving averages, one of the primary functions of a moving average are to identify trends and reversals, measure strength of an asset's momentum, and determine potential areas where an asset will find support or resistance. So great, moving averages can be beneficial in setting stop losses as well, so it can keep you in the trade a little bit longer if you know how to use them. Identifying trends, obviously one of the key functions of moving averages. Obviously, as they are lagging indicators, so i.e. they're taking data from the past, they're not there to predict new trends, but they help confirm trends once they've been established. So they use price action and data from the past, so they're kind of known as a laggard indicator, slightly slower. So many traders will consider only holding a long position when an asset price is trading above a moving average. Simple rule that can help ensure that a trend works in a trader's favor. Exponential moving averages, EMAs. Now, moving averages similar to simple moving averages, SMAs, except that more weight is given to the latest data. So you find them, and I like, because we're trading on the daily price or the 4-hour price action, I like the ones that move quickly. Okay, it's just a nice way to get into a trade slightly quicker than a simple. Okay, so something here that you're taught Intelligent Trading Academy. Again, we looked at weekly analysis on NASDAQ and found how important the 200-day moving average was there. So every time we got to that point here, that big red candle there, that was a bit dangerous because we actually closed below. But the power of the reversal and actually closed above on that week where it started is extremely powerful. And you know we're up to this level higher, a lot higher than that now. So, but again, trade what you see. That's telling you not to sell. Okay, why traders would think, wow, no, this, you get people in this downward move get taken by emotion. You shouldn't do that. Look at this. They say stock markets move up in the stairs, nice and gently, nice and slow, down in the elevator. Whack. Look at that. The reason it does that is because there's uncertainty. COVID-19 came in, the financial crash came in. Everyone pulls their buy orders. They don't know where the market's going. Their heads are, everyone's running around like a complete luno. You've just got to take stock. Yeah, respect the analysis, respect the averages that you've looked at over years of trading to give you, a credible judgment. You're making a decision from choice. You're making a decision from all the analysis that you've done. Then you should be in a better frame of mind when you enter that trade. You're going against the grain because everything's telling you to sell, 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 sell. All the press is negative. Everything's negative. But hang on a sec. My technical analysis is telling me I should be buying here. And if you did, you'd have made favourable returns without a doubt, because NASDAQ has even hit new highs from this particular graph and chart here. So once you understand the concept of the trend, we look at trend support, resistance and breaks, TSRBs, and these can be nicely identified as we go along. So by just identifying some short trends here, we can spot some good opportunities, which is quite nice. So, but we've got to learn how to draw a trend line, and you know, really we want 3 credible touches, 3 touches for a credible trend line. You know, so we need, and we don't, you know, I don't call a vertical line a trend line. You know, it needs to be a nice angle to make sure it's a valid trend, nothing too steep. And you get those examples of people drawing incorrect, you know, especially in the scalpers, drawing incorrect trend lines when they're using like a 5-minute or a 15-minute chart, because things move so quickly. And I'm just going to get quick onto our little chart here, and you can see, you know, even here, you could I'm counting that as a touch, that as a touch, but you can see I'm counting that because this is a lower highs being created. It is a downtrend. Nothing's going to happen perfectly all of the time. So what we've got to do, that's where our discretion and we're allowed to be flexible. But you know, you want to understand what the techniques are and what credibility your analysis is, and how good you are at your analysis. And there's lots of things and tools we can do to help you. Look at the markets at the moment. Where's NASDAQ? You know, again, we've had a buy here. We've been following this one for some time. Okay, even the channel here was working beautifully until we kind of broke up, hit a new high, came back down, hit a new high. This is the came down. We're up again today. I've got a buy trigger on one of the algos that we're looking at. Okay, that's fair enough. I could say, well, is there a secondary trend line that's been broken? Yeah, we're having a little look at it. So we're having a little nibble today. So we can say our analysis previously that we showed you is working out, because probability dictates NASDAQ is going higher. Okay, one of the reasons, the fundamental reason why this is happening is because we're in a low interest rate environment. Equities still yield a dividend of 5, 6, 7%, while interest rates are at point, not a lot, 0.1 over here in the UK. What do? You want to put your cash in the bank for 0.1%, or do you want something that's giving you a yield of 5, 6, 7% on dividends anyway? So as an investment manager, really, again, similar to like the financial crash, even though it's totally different, you're still seeing the same QE measures being put in place, i.e. banks buying bad debt, so the investment managers release cash, and that cash tends to go into the equity markets, hence new highs being established. So that was a quick fundamental overview of how the markets are just playing out at the moment. So back to our program. So we're nearly done now, so thank you for your patience and listening. So we have many programs. We have client testimonials. I'm not going to play these, but you can pop to our website and see what these people say. The eclectic mix of people, all doing well. Ladies there says thank you. Guy here, I love ITA's trading community. You know, well worth joining ITA. So a few snippets there of you know, varied people, young to old, saying how obviously what we're doing, we must be doing something right. Recently closed trades here last month. You know, we're winning more than we're losing. We like to prove what we're doing. We like to be very clear and transparent in our offering. We offer extra online and in-house coaching, individual packages. You know, again, very much this is not a modular course. This is very much to meet everybody's individual needs and to help them through the trading mantra of stuff that's out there to try and help you guide yourself through and navigate through those particular marketplaces. It's very much a collective environment with clear and direct education, and our aim and vision is to give you the ability to independently trade to create your own financial freedom, or a bit of it at least, making you competent, disciplined and consistent. Have the ability to take your trading to the next level. Education is the key, but providing transparency and clarity within the program should offer confidence to all delegates that enroll. During the month, we'll send out trading webinars, videos and podcasts. These are pre-recorded so you can view at your own convenience. The aim is to analyse the markets. We can identify potential setups and strategies, again giving you further confluence in the analysis that we're promoting and teaching. We can make some trade adjustments, and also you'll have the opportunity to contact us with any questions. Daily real-time analysis, you get access to our VIP Skype chat, you get a daily email, the constant communication with us will expedite your learning. We have monthly meetups. These are webinars at the moment, obviously due to the situation that we're in, and the aim is for our community to get together regularly, as we always do, and I think it's really good to meet people face to face. Okay. A Q&A session is a valuable tool for all of our traders. Then, you know, talking to like-minded people really helps. You know, they're going through the same process as you are. Regarding all the remote access and the things that are going on at the moment, everything we do can be assessed remotely via or accessed remotely via our platforms, such as Skype and Zoom. During this pandemic period and moving forward, we've invested to ensure our IT infrastructure is secure and solid to allow seamless delivery in this. So more importantly, ensures the safety of all our traders. So we offer an educational partnership. We back it with our funded account option. Hopefully we've shown you quite a bit of what we do, albeit quite quickly. As I said to you, there's no fast fix for a fast buck. This is something you can do over a period of time. Say we have 2 free opportunities for you to see more about what we do. We have a free Pro Trader Skype chat, which you can join for a limited period, and also a session with myself for 30 minutes where I can go through exactly more about the funded route, what we expect from a customer and a client. If I'm backing you with funded accounts, I want to see you invest in yourself, and what I want to see as well, hopefully meet with the majority of people, whether that be over the web or one-to-one in London, just so we have a look at that. Obviously, our benefits are 40 years trading experience, plenty of time here. There's no added on fees. If people want individual sessions, that's the only thing we kind of add on. But we back our education with our funded account program. You can pay £3 for 2 days. Elsewhere you can pay that for us for a lifetime. You decide. It makes sense to me. You have a lifetime support offer. Say again, a community of like-minded traders that work together and encourage one another. So all we ask of you is you partner, learn, build your profits and earn with us, and hopefully we get some good people from this on our programs. So it's up to you. They're free offers. Go take for yourself and get hold of them. I think Simon's kindly put more information on the chat, the info at intelligenttradingacademy.com, and we'll happily try and help you out as best as we can go from there. That's me. I think my time is up.
Fantastic, Adrian. Wow, you got started very quickly at the start, and I know why you did now, because you've given us a huge amount of information in that presentation. Thank you for that. It's good. I know what you're talking about. It's good to get together face to face. Strange to think it was only 4 months ago that we're all at the London Trader Show, slapping each other's backs, shaking hands, and chinking pint glasses with no social distancing.
No, exactly. Yeah, exactly. That's now changed.
How far things changed, but I think we'll go back. I think we'll get back to normal. That's my belief inside. It might not be immediately, but we'll get back to that, hope with any luck, because it is enjoyable.
Fingers crossed.
Fantastic. Listen, I have posted the email address there, info@intelligenttradingacademy.com. It's been in the chat box a couple of times. The only quick question maybe we could squeeze in is from Margaret. What is the relative vigor indicator that you mentioned?
It should be on the standard MT4 platform, and it's based on the 10-day average of the highs and the lows. So basically, if over 10 days the asset closes higher than where it opened, it will be in a positive standpoint. And if over 10 days it's closed lower than where it started on, it will show on a negative standpoint. But it's like a 10-day mean, like a 10-day average of that price data. And I just like the way it kind of interacts quite nicely with that particular strategy.
Fantastic, great. Well, Adrian, thank you again for joining us. Always good to have you on.
Pleasure.
I love your presentations, very clear, concise. You know exactly what you're doing, and that comes across in heaps in the presentation. So thank you again for joining us. Have a great